Good evening, students. Today we are going to learn a concept called fund based accounting. In my previous video, I have explained you all about the balance sheet and the important points to be kept in your mind while preparing balance sheet. In our today's video, we are going to discuss upon a fund based accounting. What does it mean? First, you should understand the term fund. Fund is nothing but it is an amount which is being either received or which has been kept aside for a specific purpose by a non-profit organization, and it can't be used for any other purpose apart from the purpose for which it is being kept for. There are some funds which can be used for any purpose. Say for example, donation. It is a fund which has been received to a non-profit organization. But if the donation doesn't carry any condition, say for example, this is purely for construction of a building or for library, then that donation is considered to be as a general donation, which is a fund, and it can be used for any purpose by a non-profit organization. Whereas, if a non-profit organization receives any donation with a condition or which specifies for what purpose that donation has to be used, then those donations are considered to be as a fund, and that too it will be considered as a specific fund because it has a reason, it has a condition for what it should be used. Thus, we can say fund is an amount that has been received or it has been kept aside by a non-profit organization for a specific purpose. That is what very important. The non-profit organization for specific purpose. At the same time, you all must also keep in your mind that whenever a non-profit organization deals with these specific funds, they will open a separate bank account for each fund. So there will be a separate bank account for each fund that has been received by a non-profit organization. And any donation which are specific in nature or any fund that is kept aside for a specific purpose will be credited to a separate fund account, and it will be shown on the liability side of the balance sheet. I repeat it. Any donation that is specific in nature or any fund which has been kept aside for a specific purpose will be credited to a separate fund account. That means whenever a non-profit organization has got some funds and it is for a specific purpose, they will have a separate bank account on one side, and from the accounting treatment, the fund will be credited to that separate fund account on its credit side. It is an income, it's a type of income, and it should be shown on the liability side of the balance sheet. And also, the non-profit organization can deposit such funds which has been received for a specific purpose in any of the schemes with a bank, or can also invest in some company shares. And for this, the non-profit organization will get in return interest. Whenever you deposit a fund in any of the schemes in bank, like fixed deposits or saving deposits, recurring deposits, the bank offers you some discount, some interest, right? The bank will offer you some interest. The same way, whenever the non-profit organization deposits such specific funds, they will be receiving interest out of it. So even that income portion, that is the interest portion, will also be shown on the credit side of that fund account, and the entire amount, that is the fund amount, will be appearing on the liability side of the balance sheet. In the same way, if a non-profit organization incurs any expenses or makes any payment with respect to that specific fund, it should be debited to that particular fund account. However, if the expenses with the respect to that specific fund exceeds the fund amount, in such cases, the difference amount will be taken to the debit side of income and expenditure account. Let me give you an example. Please kindly make a note of it. A non-profit organization by name X Club has received a specific fund, namely Tournament Fund, worth of rupees 1 lakh. Now this non-profit organization, X Club, has to arrange for the tournament, and when they are going to make necessary arrangements, obviously they need to incur some expenses. So for example, they need to prepare the banner, they need to give some advertisements, they have to issue the tickets, all those things are there. So for all this, they have to spend some money from their pocket. And what amount, from where will they use the amount? It will be used only from that tournament fund. So there was a tournament fund with the organization to a worth of rupees 1 lakh. And let's take an example that the expenses related to this tournament have fetched to an amount of rupees 20,000. So now, how much you will have? Balance 80,000 rupees. That is from 1 lakh. If you eliminate this 20,000 rupees, you will have an amount of rupees 80,000. Now, from this tournament, you have earned an amount of rupees 10,000 by sale proceeds of your tournament tickets. You would have issued tickets, right? They would have purchased it. So from that, you have earned 10,000 rupees. This 10,000 will be added to that fund. So now it becomes 90,000. And after the tournament gets over, obviously the winners needs to be honored by giving some prizes in terms of trophies or cash awards or medals, whatever it be. For this also, you make use of the available balance amount from that tournament fund. Now you had 90,000, say for example, 80,000 was our previous balance, and adding the 10,000 rupees of the receipt, it became 90,000. But trophies, the shields, the medals and the prize cash awards all put together, it fetched an amount of rupees 1 lakh. Now look at the situation. You had initially 1 lakh, you spent 20,000 towards expenses, you had balance of 80,000. To that you added the 10,000 rupees balance which you earned from the sale of your tickets, tournament tickets. So 90,000 is the only available balance. Whereas you have spent an amount of rupees 1 lakh, which means there is an excess debit. That says the expenses is more than the income, that is the funds. How much is the difference in this case? An amount of rupees 10,000 is difference. So this 10,000 rupees, which is in excess of the available balance, has to be taken to the debit side of the income and expenditure account. Only in such cases the balances will be shown in the income and expenditure account. Apart from this, you will not show any amount related to the specific fund in income and expenditure account. I repeat it, any fund which you have received or kept aside for a specific purpose will appear only in the balance sheet on the liability side, whereas it won't find a place in the income and expenditure account unless and until if your debit side is more, that is, if your expenses pertaining to a specific expense receipt is more, only then you will take them to your income and expenditure account. I hope you all are understanding the concept. I repeat that concept once again. Kindly lend your ears. Only in the case where your specific expenses towards a specific fund exceeds the amount in the balance of specific fund, the difference amount will be taken to your income and expenditure account. In other cases, it will not appear in your income and expenditure account. It will be shown only in your balance sheet. Let me give you one more example. There was a specific fund pertaining to match fund, 1 lakh rupees. The match expenses, which comprise of the advertisement expenses, the issue of tickets, all this was an amount of rupees 10,000. Now what will be the balance? Yes, 90,000 will be your balance. You have earned an amount of rupees 5,000 from the issue of tickets for that particular match. What will be your balance now? It should be rupees 95,000. Now you are going to issue the prizes for the winners for the winners, and the prize, overall prize amount comes to rupees 50,000. Now what will be your balance? 95,000 was your balance shown pertaining to that fund. From that 95, you have now used 50,000 towards issue of prizes. Now you will have an amount of rupees 45,000 in the balance. This 45,000 you will show only in the balance sheet. On the liability side, you will show the workings very clearly. What was the existing fund, what was the current fund, by eliminating all those expenses pertaining to the specific fund. This is what the concept. So whenever any fund is received, you should treat that fund in such a way. If it is a specific fund, you should ensure that there is a separate account open for that specific fund, and that fund amount, whatever it shows, if it is a credit balance, then fine, it will be shown on the liability side of the balance sheet. If at all that particular account shows a debit balance, then how much ever the debit balance is, that should be taken to your income and expenditure account. Accounting is done on such basis is what we call as fund-based accounting. So fund-based accounting is nothing but when we follow or adhere all these policies, all these steps, then we call such type of accounting as fund-based accounting. Able to understand? Right. So now let's try to understand how these funds have been categorized and what are types of funds. The various types of funds and categories of funds which you all will be learning right now. Are you clear with the concept, students? Fund-based accounting is nothing but it is an accounting process whereby the receipt or amount received in form of donations for any specific purpose that has been kept aside should be used only for such purposes. Accounting done on such basis what we call as fund-based accounting. There are some examples for this fund-based accounting. They are building fund, library fund, sports fund, prize fund, tournament fund, annuity fund, endowment fund, loan fund, pavilion fund, etc. So these are the funds which you are going to deal with under the concept of fund-based accounting. Clear? Fine. Now let's try to understand one concept, that is accounting of asset created out of specific fund. What does it mean? It is not something a private profit, making some private profit. You have created an asset out of the specific fund. Say, let's take an example. There is a building fund to a worth of rupees 10 lakhs. From that amount of 10 lakhs, you have spent an amount of rupees 6 lakhs towards construction of a building. You have a building fund for rupees 10 lakhs and you have spent 6 lakhs out of the 10 lakhs for a construction of a building. Now how to account this values? 10 lakhs, 6 lakhs, where to show, and where to show the remaining 4 lakhs. What treatment will be given to such funds, building funds? It's quite simple. In our balance sheet, we will have assets on the right side and liabilities on our left hand side. And as I said very clearly in my previous video, that for any organization, let it be a profit oriented or a non-profit oriented, finance is essential, finance is very important, and this finance, that is the fund or the capital, whatever term that we can give up, but according to our syllabus, non-profit organization, the term capital will be denoted by capital fund. So obviously your balance sheet must have capital fund. And we all have already learned in our grade 11 the accounting equation, assets are equal to liabilities plus capital. Having that equation in our mind, now you think over, you had an amount of rupees 10 lakhs in the form of building fund, and I said any fund towards a specific purpose will be shown only on the liability side, and you will open a separate fund account for each fund whatever you have received. So when you receive a building fund, obviously you would have opened an account in the name of building fund. So you had 10 lakhs rupees balance in that building fund, and that would have been shown on the liability side of the balance sheet. From this, you have utilized an amount of rupees 6 lakhs for the construction of a building. So now it has become an asset. A building is an asset to a non-profit organization, right? It's an asset to a non-profit organization. So building has a worth. Its worth is rupees 6 lakhs. So building will appear on the asset side of your balance sheet. So on your right side, that is in your balance sheet on the right hand side towards the asset side, you will document building and the worth of the building as rupees 6 lakhs. And it might be either completed or it might be in work in progress. That's not the matter. Whether the building work is completely over or whether the building work is still going on, as on date, what amount that you have spent for the construction of building has to be documented. So 6 lakhs, you will take it to the asset side of your balance sheet. On your liability side, you will mention building fund rupees 10 lakhs. From that, you will subtract the 6 lakhs rupees which you have used for the building construction purpose. So you will mention it as from the building fund opening balance less transfer to capital fund. So this 6 lakhs again you will go and you will route it out to your balance sheet. If you just look at it, you will understand. Just if you look at it, you will be able to understand the things very clearly. In your balance sheet, on the liability side, the 6 lakhs, from that 6 lakhs, the amount moves to your asset side, and the same 6 lakhs is getting add on towards your capital fund. So in the name of capital fund, you will write opening balance tournament fund, that is transferred from building, right? So this is how you will show the treatment. The treatment for such assets which has been created out of the fund will be your building which constructed is 6 lakh, that will appear on your asset side. On your liability side, you will have your first initially building fund 10 lakhs. From that you will eliminate the 6 lakhs. So 4 lakhs will be the balance, and remaining 6 lakhs will go and appear towards your capital fund. Clear? Right. Now let's move on to the concepts of various funds such as annuity fund, prize fund, tournament fund, loan fund, all these. Right, now let us go ahead with the categories of funds. Funds are basically of two types. One is your unrestricted funds and the second one is restricted funds. Unrestricted funds means what? Let's first understand the concept of unrestricted funds. You won't have any restriction on the usage of the funds. Whereas a specific fund has a restriction, right? Generally funds are of two types. Without any restriction, if you have a fund, then that comes under unrestricted funds. For example, general donations. Right? So no restriction is enforced on such funds on its usage. It can be used for any purpose by the non-profit organization for which they exist. The ultimate purpose of an NPO is to provide some service, and for that purpose they can use the funds. There is no restriction. Whereas when we saw the specific fund, we had some example, that building fund, which means the amount whatever lies in that particular fund has to be used only for the construction of building. You can't use that for any other purpose, even though you are a non-profit organization. Whereas here, being a non-profit organization, the fund which doesn't carry any condition can be used for any purpose. And this is known as a general fund or capital fund. So, general fund or capital fund, the other name is also corpus fund. Right? And of course, the surplus will be added to a general fund or capital fund, whereas deficit will be deducted from the capital fund or general fund. Now moving over to our restricted funds, it shows very clearly that it consists of government grants, which is a specific receipt. If you just go and see your receipts and payment account format, you could see government grants specific. Next, endowment fund. If there is any endowment fund, then that will be a specific purpose and that becomes a part of your specific fund. That is, it has a restriction. Annuity fund, loan fund, fixed assets fund and prize fund. Let us start understanding each one of this one after the other. So restricted funds, it is a fund which has some restrictions for the usage. So usage of the fund is restricted either by the management or by the donors, because as you all learned that fund is nothing but it is an amount which is either been received or which has been kept aside. So you will receive from whom? You will receive from donors, from the members, or who can keep a portion of the amount aside? The management. So in that aspect, the restricted funds are nothing but the usage of the fund will be restricted either from the management end or by the donors, where they will have some conditions. First one, government grants. It is nothing but it is a specific grant, it is a specific fund and which has been received for a specific purpose. It should be used only for that purpose and it follows the fund-based accounting concept. Thus, the funds or the grants has to be credited to the respective fund account. Example, if government provides a grant towards polio programs, then the amount which is being provided by the government for the eradication of such pulse polio programs will be credited to the respective grant for which it has been provided. At the same time, the interest, which is nothing but the income that is received from the funds, will be credited and expenses will be debited. Any doubt, students? So government grants, remember, if a government is providing you some grants, which is a subsidy for a noble cause like arrangement of pulse polio, then the amount whatever that you receive as a grant from the government will be credited to that particular pulse polio fund, and whatever the expenses that has been incurred, you will eliminate from that particular fund and you will retain the remaining fund of that particular grant. So expenses will be debited and incomes will be credited. Income here in the terms of when you deposit that particular fund for a time period, it earns some interest. That interest will be credited. Right? Moving on to our next segment, that is endowment fund. The next one is endowment fund. It is nothing but it is a fund that is received by a non-profit organization in the form of gift or bequest, which means out of interest. Either someone would have provided to the NPO, non-profit organization, as a gift, or someone would have offered out of that interest. So any fund which a non-profit organization receives in the form of a gift or in the form of a bequest is considered as an endowment fund. It is a donation from the donor. It is nothing but a donation from the donor who has a willingness to provide it, with some conditions whereby the NPO can use only the interest income from the investments for the specified purpose, and the original amount of donation remains intact. That is the crux of endowment fund. That means if I am a person who has a will or who has an interest to offer an amount of rupees 10 lakhs to a non-profit organization as a donation, this I am making it as a gift or as a bequest. So that will be documented as endowment fund. And I am making my desire, or I am making my terms and conditions very clear to that particular management of NPO, stating that for what purpose I am offering this fund and for what purpose it should be utilized. Then the management has no other go. They have to use only for the purpose what I have offered for. The management has to use the fund only for the purpose of what I have offered for. So that becomes an endowment fund. But the speciality of this is that the management can deposit the entire amount what I offered in any of the schemes and can earn the interest, and they can use only the interest amount for the respective purpose. They can't keep a hand on the principal portion. Which means, say for example, if I am a person who offered 10 lakhs and I say every month the students of this particular orphanage, which is a non-profit organization, has to be given a fair meal or at least a good lunch for the purpose this donation has been offered, then it is not easier to provide a lunch or dinner for a handsome of 50 students in an orphanage. Now the management will take a call. They will invest the amount of 1 lakh, 10 lakhs under the schemes of any bank or any other investments like shares or securities, and they'll earn the returns out of it. That returns amount, that is the interest amount, should only be used for this purpose. They should not take even 1 rupee from the initial amount of the 10 lakhs. This is the concept. Here if you look at the example, I have given an example. Just look at the example. Mr. X donated rupees 10 lakhs to a non-profit organization in the form of an endowment fund. That is as a gift. The non-profit organization have invested the amount in a bank under a fixed deposit which provides 10% interest per annum. Now, the non-profit organization will be getting an amount of rupees 1 lakh as an interest income. Can you able to understand? They can invest this amount of 10 lakh in any of the schemes and that will give you a return in the form of an interest. Here our interest amount is rupees 1 lakh. Now this 1 lakh rupees can only be used for the specific purpose for which the NPO received the amount. Thus, the NPO will get that 1 lakh interest and it can use that 1 lakh interest amount only for a specific purpose. Thereby, the principal amount, that is rupees 10 lakhs, which Mr. X gave to the NPO, will remain with the bank under the deposit scheme. So, such type of funds which has a restriction to use upon with some conditions is what we call as endowment fund. Moving on to our next fund. The third one is an annuity fund. Annuity fund arises when a non-profit organization receives an asset from a donor with some condition to pay a specified amount periodically to designated beneficiary or beneficiaries. Annuity is a fixed annual payment. So, in the previous segment whereby we saw that the fund amount which has a restriction for its usage with some condition for the usage is what we call endowment fund. But when you receive an asset from a donor and it has some condition for the usage, then such type of fund we will document it or we name them as annuity fund, whereby the condition might be to pay a fixed sum of amount to a particular beneficiary or beneficiaries. But this payment amount, that is the annuity is setting, it's a fixed annual payment for a non-profit organization that continues until the lifetime of the beneficiary or until the period specified by the donor. So for example, I have a building which is not being used for any purpose. I am deciding to give away the building to a non-profit organization to use for any purpose. But I insist them that you make use of this property to do your service, but provide me or provide a fixed amount, say for example every month rupees 10,000, in order to cater the needs of either myself or the one whom I am mentioning. This process or this method by which a non-profit organization receives a fund and makes the payment towards it, we call them as annuity fund. And here I might have specified that the payment should be delivered for a period of 20 years. Then up to 20 years, the non-profit organization will render or will make a payment of the said amount of rupees 10,000. If not, I mentioned in such a way that pay a fixed amount of rupees 10,000 every month towards Mr. X or Y whom I am mentioning up until his last breath. In that case, until that particular beneficiary demises, the NPO has to make a payment of rupees 10,000 every month to Mr. X. The annuity fund donation, that is the asset, the building, what has been offered to NPO, will automatically get converted as an asset to that NPO either after the 20 years time period. If not, as soon as Mr. X demises, the property becomes NPO's property. So the property which I am offering to use for an NPO to conduct the services, for which I insist them to pay periodically an amount of rupees, some X amount, say for example 10,000 to Mr. X or to me, either for 20 years from now or until my last breath. Then after the time period gets over, either the one which is mentioned as time period, if not the lifetime of the beneficiary, the asset which has been provided to the NPO will be their property. It will be the property of the organization. So this is the speciality of annuity fund. Any doubts, students? Right, moving on to the next segment. The next one is loan fund. Obviously, the loans can be offered by non-profit organization. There are many NGOs or NPOs which operates for providing educational services or to assess the need of the people who couldn't able to continue the education. One such good example is the Agaram Foundations. Agaram Foundation, you all know, I hope so, right? The brand ambassador is Surya, actor Surya. So Agaram Foundation provides the educational assistance to the dropouts or to the needful people, the students who couldn't able to continue their schooling. So they provide the technical as well as they provide the assistance to continue their schooling and even if required to go ahead with the college. So It is set up to grant loans for specific purpose, loan to pursue your higher education or studies. So such type of NPO will be maintaining a loan fund. Moving on to our next segment called fixed asset fund. It is a fund that has been earmarked for investments in the fixed assets or which have already been invested in some fixed assets. So fixed asset fund, it says very clearly, it is a fund which has been kept or which is being decided to put in some investments in the fixed assets or which have already been invested in a fixed asset. Example, the building fund. It is nothing but the amount invested in the fixed assets fund during the year, but it must be transferred to the capital fund in the balance sheet. This is what we discussed before we start with the categories of funds. Whenever you are earning a fund and creating an asset out of the fund, the amount of the asset needs to be transferred to your capital fund. Can you able to understand, students? Now moving on to a next fund. The next fund is prize fund. It is a fund that is kept for the distribution of prizes for the achievements or contributions towards the society or towards the welfare of the society. Let me give you a good example, or let's see how to deal with the funds. Right? A small exercise or small problem that will enable you to understand easily. There is a prize fund. It will be given the question. Prize fund rupees 1 lakh. Okay, it's not 10 lakh, it's 1 lakh. Next, you had expenses. Towards distribution of prizes. ₹25,000. Can you able to follow? There is a prize fund given in the question. There is 1 lakh. You have incurred an expenses from this prize, which is 25,000. And now what will be the balance? Now the balance will be rupees 75,000. If you subtract this 25,000 from 1 lakh, you will have 75,000 balance in your prize fund. Now this calculation you will show in the balance sheet. You need to show these calculations in our balance sheet. Now in my balance sheet, the amount prize fund, whatever I have it during that particular year, the beginning, or whatever given the question, should be mentioned in my liability. It's a liability. Any fund which is for a specific purpose, here the purpose is, price is a purpose. This fund should be used only for the price purpose. So it's become a specific fund. So in my liability, I will mention it as prize fund rupees 1 lakh less price expenses 25,000. So the remaining 75 only is still available in the price fund. This is one way, that is showing it in the liability side. When it won't appear in the liability, if there is no balance. Let's say this example 1. Let's see the other example, example number 2. Let's take example 2. In my example 2, my price fund is rupees 1 lakh. Okay, I have spent rupees 1,10,000 towards prices, which means I purchased prices up to rupees 1,10,000. Now see, from 1 lakh, if I subtract 1,10,000, I will be having a negative balance of rupees 10,000, which means I have spent 10,000 rupees more than my available funds. So this 10,000 denotes nothing but spent more than available funds. Only in such situation, this 10,000 should be shown in your income and expenditure account. Which side? Debit side, because it is a payment. Can you now able to understand the amount whatever I have spent? Okay, if you look at here, it will be very clear. The amount whatever that I have spent will be shown in such a way that from 1 lakh 1,10,000 I spent, so 10,000 rupees is excess which I spent should be taken up to the debit side of my income and expenditure account. I hope that you would have understood the concept of fund based accounting as well as the various categories of funds, what needs to be done and how it should be taken into account. Let's work out the problems related to balance sheet and this fund based accounting in our next session. Thank you, students.